With Bloomberg Markets, we're talking about Siam Commercial Bank, or SCB, because themselves and Julius Baer Group have agreed to work together to manage the wealth of rich clients in Thailand. This is the country's second largest lender. It'll have a 60% stake in the venture, with Julius Baer holding the remainder. Let's discuss it with Siam Commercial Bank's Chief Strategy Officer, Arak Sutivong. Arak, thank you very much indeed for joining us. Tell us how this JV is going to work.
Yes, thank you for having me on the program. Yes, so yesterday we just announced a strategic partnership with Julius Baer Group. As you mentioned, we're setting up a joint venture to provide wealth management services for Thai high net worth individuals, right? And this is really the first of its kind in Thailand, and also understand this to be the first for Julius Baer Group in Asia as well. So the intent is that right now what we know is that there are actually a significant number of high net worth individuals in Thailand, approximately 30,000 of them, with investable asset of around $300 billion US. The problem so far, though, is that Thai banks are not able to serve them well, right? Because we are more of deposit taking and provide services. So, and in part is because of the lack of the capabilities and really the access to global investment. So with this partnership, what we'll bring is essentially the best of both worlds. Julius Baer Group will be able to bring global expertise and investment advisors and things that Thai people are probably not used to or exposed to yet. And then Siam Commercial Bank bring the local insights and the relationship to this joint venture.
Arak, what about that pie? You mentioned all those billions, $130 billion, if not more. What percentage of that do you want to grab?
Right.
What are you seeing in revenues? How much do you project in, for instance, 5 years from now?
Right. First of all, wealth management services, the investable assets in Thailand is actually quite large, but so far local banks, SCB included, we managed to capture a very small amount. Probably collectively local banks less than 50%. The rest is the money is going offshore. At the moment, we believe that in 3 to 5 years with this partnership, we should be able to double AUM, asset under management for the group. And right now, the revenue for wealth management for SCB, frankly, is relatively small compared to the rest of the profit. It's probably less than 5%. But if we are successful in this venture, we should be able to grow to 10 to 15% in 3 to 5 years' time.
There's also a few reports in the local press that you're planning a JV or a partnership with a US tech company. Is there any truth in that? If so, with whom, and how does it actually change the posts or goalposts for your digital strategy?
Yes, so I would not be able to comment on the exact nature of the transaction of the deals, but we are exploring partnership with a lot of digital companies, the large technology company, as you mentioned, because we see that digital, as part of the digital disruption, digital transformation program that we are undertaking right now, we see a couple of major areas where we need to, frankly, partner with others because as local bank, we accept the limitations that we are not able to develop technology on the cutting edge, right? So a few areas that we see are one would be around data analytics, right? Building data as a business, that's one area we are focusing on. And based on that, we can actually do many things, such as digital lending and a few other things. So we've actually, over the past few years, we've been taking a number of trips to the US and to China to talk about a lot of these opportunities with tech giants. Hopefully by sometime this year, we'll be able to say a little bit more about that.
Of course, this will have an impact on your headcount and your bricks and mortar side of the business. How aggressively are you going to be cutting that headcount up to 2020? And what will you do to make up for this steep fall in number of branches?
Yes. So in fact, there's a context to that, right? We believe that in the new paradigm, where really the new way of doing banking, I don't think physical footprint will be all that important. It's the engagement that we want to have with the clients. So right now, in parallel, what we're trying to do is to build digital coverage through our mobile banking, where we're trying to continue to migrate the customers to be on that mobile banking, where it's much cheaper and much better to serve the customer. And once we are in parallel, what we're trying to do is that to reduce the footprint, the physical footprint, the traditional branches that we have. Right now we have about 1,200 branches or so, and in 3 years' time, we expect to reduce it to about 400. So that's actually a significant drop. The intention is not to deprive the customers of the service. In fact, it's the other way around, where we believe that the traditional branches will serve its function, but really a lot of engagement will happen on digital, where we can apply data, we can apply a lot of insights that I mentioned. And in parallel, we also redefine the way we cover the customers, right? When we reduce the traditional branches, we also increase the different formats, investment center to be complementing with the wealth management services, business center, and all those things. So in a way, traditional branches will go down, but we believe the engagement with the customers will come up. And in parallel, what's going to happen is that the size of the workforce, as you mentioned, will also come down significantly. But what we're seeing is that anyway, yes, sorry?
I'm afraid we've got to go into a break. Thank you so much for joining us today and telling us about your plans. Arak Sutivong there from Siam Commercial Bank.